Hello, everyone. Today I'm joined by Daniel Gladiś of the Vltava Fund in Czechoslovakia. Daniel and I have known each other for quite a while, and I really admire his ability to think both at the micro level and macro level. Unfortunately, he did write a book called Learned How to Invest, but it's in Czech and I don't speak Czech. So I'm excited that he's writing a second book, and hopefully I can glean something from that. So Daniel, I know you've been hard at work at getting your second book out. What is the title, and what drove you to write it?
Well, the title is Stock Investments, and it's actually, the second book was published in 2014. So what I'm writing now is a extended second edition.
Okay.
And my first book, Learn How to Invest, was published about 17 years ago. And every year or so, when the publisher calls me, she tries to push me into writing another book, which I always refuse. But she called me. It was an interesting thing. She called me about November, and she said the sales of the books tripled since March, and I couldn't figure out why. So, and I can't either. And apparently, the virus and the lockdown had this perverse effect that people starting focusing on stock markets, not only opening their new accounts with Robinhood, etc., but also buying a lot of books by investments. That's probably why. So she asked me, do you want to do a reprint, or are you going to write another one? As I said, okay, well, this time I'll write an extended second edition because I think there's a good topic for that, because when I wrote the two books, I tried to focus on ideas and principles and recommendations that remain valid more or less forever, because I don't think that the investment itself changes over time. So that's why the book has been selling, the first one for 17 years, and it can be selling for another 17 years because it's always of good use. But this time I decided to write more actual extension because of what happened last year, not the pandemic, but what happened with the financial markets, and especially with the money printing and so sort of change in thinking across the whole political spectrum about how to use money, how to finance deficits, etc. And this will have a very, very large effect on financial markets, on the value of currency. And unfortunately, people have to deal with it somewhat. So what I'm writing about, I'm describing this environment, that will be here for a very long time, and trying to explain investors how they should think about investments if they want to preserve the value of their wealth over time.
It sounds like a very worthy measure. And who will benefit most from reading this? Like, who's your target market? Is it individual investors?
Yeah, well, everyone that has acquired some sort of wealth and wants to preserve it at least in real terms over a long period of time, so not 2 or 5 weeks or months, but many years and even generations. Which unfortunately, not unfortunately, but which covers maybe half of the population, everywhere. So people, as soon as you have money, you become investor. Maybe even if you don't know it or don't want it, but even not doing anything is an investment decision which affects your wealth. So you have to face the music and think about it and do something. So I'm trying to help them.
And talking about not investing, what are the biggest mistakes you see individual investors make when they select funds?
I think the biggest mistake by far is that they select funds based on recent performance, and I think it's both ideologically terrible way to select fund, and also statistically it's been proven to bring terrible results. So I actually recommend people that they should make their conclusions about selecting or not selecting a particular fund without looking at its performance, which it's very hard to do, and almost no one does it, because once you look at the performance, you're already 90% predisposed to the outcome, and I think that's incorrect.
Yes, it's quite hard, I think, because I've always been kind of on your side, and now that I'm talking to people about funds, the first thing they look at is performance, and then so I have to think about that. So it
We
is
actually,
very hard.
to this topic, we always published our long-term performance on our website, but we stopped doing that recently because we don't want people to become our investors primarily because the performance they saw. You know, we want them to read our presentation, you know, think about our investment philosophy, and pretty much come to a conclusion before looking at the long-term performance. We'll
Interesting.
see how it goes. Maybe we will we will not get it as many interest, but we'll see. And
But
if we do, then it'll be more genuine interest, I think.
I think you've been in the market for so long now and have done well for so long that I think maybe it's just maybe there's not that many people coming to your website anymore, but people are making decisions from other areas. I'm not sure I'm not sure how it works, but I have a feeling you'll still get lots of investors interested. What are the main themes of your book? What are the main points you're trying to convey?
Well, I'm trying to take it quite simple. So I describe the environment, the economic environment in which we will be living for many years to come. And the main characteristic is that the loss of value of main currencies will probably fasten, will go faster than in history. And then I looked at the main asset classes, you know, that could provide you help, and then within those preferred asset classes, which, you know, no surprise, the stocks come out very high. I look at how you should select individual stocks if you want to do that, and I can give you a simple example. So for example, you know, to illustrate my way of thinking. So the winner of the U.S. Tennis Open last year got prize money of $3 million. Okay. The winner of US Open in 1985 got $250,000, so 12 times less. And you know, the value of the money didn't go down 12 times, but there's certainly some more commercialization of sport involved. But certainly we can say that the human factor, you know, the skills, the ability, you know, to the performance, you know, kept the real value over time. And I think this is a simplistic example, but I think it actually holds in real life and in business as well. So I think if you worry about inflation, you should, you know, among other things, look for businesses where the contribution of the human factor, so to speak, is very high relative to other things, because the value of the human factor is not eroded by depreciating value of the currency. So I'm trying to explain, you know, things like that, and then try to point out to certain businesses or industries where you can find you know, companies that fit this.
So maybe mining companies or commodity companies might not be a good area.
They might not, because there's always human factor involved, but it's smaller. But so the good example would be perhaps some financial services companies like Moody's or S&P Global, where the human factor importance is very high, or the Burford Capital, the litigation finance company, where basically all of the value is created by the human factor. So, you know, things like that.
Okay, I like that, the human factor. And obviously the tech companies are there right now, but maybe that would be good. Can you, I know it's in, do you think you could help read us a small passage from the book? I don't know if you're comfortable doing that in English.
Yes, it's in Czech language, so it wouldn't be
good.
Sounds
okay.
very nice.
Okay,
but I gave you a complete example with a tennis, you know, analogy that it's also described.
Okay.
I think it's one of the key points. The human factor is one of the key points.
I like that, the human factor, because even in investing, like the selection of funds, and it is the human factor, because the algos are doing all the work, and it's very, very hard to understand what is going on unless you have a human being explain it to you. So when do you think the book will come out? When will it be published?
Probably in second quarter of this year. Yeah. So it's pretty much written. So we're now going through this editing, you know, phase and graphics and stuff like that.
And one thing you said was that your latest letter, which is I know is in English, has some components, some of the newer components of the book in it. So where would that be a good place for an English-speaking audience to get?
Yes, I think a lot of these themes and ideas appear in our letters to investors, the quote letters to investors, which could be found on our website. So
Okay.
and they're also published in English. So that would be a good substitution, I think.
Okay, great. So I'll make sure to put your website for anyone listening in the comments or wherever we publish this. So thank you so much, Danielle. And I'm very jealous that you are off in the mountains. So and I'm stuck at home, but that's okay. I'll forgive you for now. Thank you.
Yeah, thank you very much, and thank you for the invitation, Marika.